Okay, let's do this. Hello, everyone. This is me, Guillaume Lambert, and Rosalie. We're part of the Panoptic team. So today is Stop Losing, Start Trading. So a live trading show for people that want to learn about trading options. I've been teaching Rosalie for the past 2 months. She's getting really good at it. Um, Wait, can you hear me, Rosalie, or not? Yes.
But
Can you
yeah,
hear me or not? Sorry, technical difficulties here.
yeah.
Okay. Sorry, so we're doing the live trading show, teaching people how to trade options. The best way to learn is through experience. So Rosalie has been killing it, recommending trades to the intern. The intern decides if they want to trade or not. So whatever we say here is not financial advice, but this is just a way for people to see how we think, how we trade, how we actually manage a portfolio. Yeah, without further ado, any updates on your side? What do you have on your mind, Rosalie, for today?
Yeah, I good to be here. I've been really enjoying trading and learning more how to manage my risk and take profits in this very difficult time of a market where portfolios are just going to be down for some time. So thinking about how to manage those risks, how to get exposure to some upside gains in this time has been really great. Yeah, we had a conference this week in New York, so it was really exciting to meet lots of traders and just a couple announcements as well from marketing. We had our DBank Quest that ended, so 5 lucky winners earned some cash for participating in our early depositors program as well. And we gave some depositors 2x Boost last week as well for depositing into Grow, which is the passive liquidity provision platform that we built out for Uniswap. So, yeah, really excited to see our protocol grow and meet more of our community and help them trade better.
Perfect. Yes. So we have a lot of things in cooking, I guess, on Panoptic. Trading competitions may make a comeback. This is very cool. We'll release more information, and we'll do what we do every demo, every time we have this is to just look at the markets, give us a bearing as to what the markets are doing, and if you do this, that helps guiding the trades that you want to do later on. But if we go back to the trade page here, um, yeah, the market has been pretty stable over the past few days. It's not necessarily we had a boost a little bit for a while last week. People were extremely bullish. Now it's going down. People are sad. It's all very, very kind of back and forth. What we have to think about is just the longer term may seem to be down, and then we deal with monthly options. So a lot of what we see is kind of not responding right away. We have a lot of time to respond if we need to. We don't have to be kind of on it 24/7. So that's kind of the thing that we want to kind of also communicate. Whatever the market is doing, it's actually very there's different ways to trade. If you can be risk off for a little bit and not necessarily have all your eggs in one basket, regardless of the price action, you can still be able to manage your portfolio. So markets have been a bit sideways. It's a sounding like a broken record, but all of what we see is always the same thing where there's a spike and then a downside. It helps with trading on Panoptic because you can actually have a extremely easy way to approach this, which is trading long term, sizing properly. So markets have been doing okay, but the portfolio of P&L of Intern actually has been doing very well. And yeah, we can spy on Intern. Again, we just discussed trades. Intern decides maybe if they want to do it or not. But yeah, again, Rosalie, on your side, what do you see on the screen? What do you want to look at first on the Intern's portfolio?
Yeah, I'm excited to see first P&L over 100. So that looks great. I think we had put a put. I'm curious to see what the put option is doing in the ETH pool. If we can start with that.
Yeah, why don't we start here? So we can see from the interface the different metrics. Here, this one is the biggest one, $85 of profit on a again 4,000 5,000 ish $6,000 amount of collateral. And yeah, we have two straddles that are setting an option, collecting fees as the market is kind of maybe going sideways. This one put option is making money, $25. If you remember, this was a maybe preemptive trade. This was again ahead of the federal FOMC announcement. It wasn't clear what was going to be the outcome of that announcement. Turns out that the price did not move much. But because we were anticipating the worst, maybe, and the price did go down since the time we've set it up, this option is earning $25, mostly on notional. We're only paying $5 worth of premia. Again, the premia goes down. You always pay more over time, and it's still in range. And it's not necessarily it would keep paying fees, but yes, the fact that it went the way we wanted, the fact that it has a positive fee, and gas is cheap. It costs maybe $1 or $2 to set up, $1 to close. That could be a good winner. So I would say, unless you have a sustained bearish outlook, Rosalie, do you think we should keep it on or close it and bank again $22 on that?
I think we should close it too. I was going to ask because I know it's a monthly option. If we usually, we're like, oh, we're not going to do anything yet, see, and kind of take a little bit more time since monthly options take some time to be realized. Yeah, because we're paying for the option, I think it would be beneficial to close it now and see maybe if we want to hedge something else. There's no more announcement, so.
Yeah. So again, sell the news or at least prepare for the worst. And that was the goal of this put option. And I'll go briefly to the market page. And the reason why I think Intern did this is that they had two existing positions. This is kind of their whole portfolio, but we have the same view here. Two positions, two straddles, one put option. In theory, they were exposed to the downside. So buying this put option allowed them to be profitable, even the price crashes to 1,500. They are hedging the risk on the downside, and that's kind of the goal of this trade. So I would say agree with you. We made money. I don't think there's going to be any systemic like sudden change in the market, so we can just close this and yeah, have the portfolio. Now we have risks on both sides, but because we are not paying off the streamia, the fees can accumulate a bit faster. And yeah, so that's one is the put option. I'll look at the straddles that we've sold. Both of them have been kind of fairly working well for us in terms of price move. We're earning fees over time. Even though we started delta neutral, it's going against our intent a little bit, but we're earning fees. This offsets the losses. We're still making money even though we're wrong. Premium is up to the right. So these two are pretty much identical. We can just keep them. This one has been open over 15 days, 0 to 10 days. So this one is also where the core of our portfolio is earning fees. They're earning $68 in fees. This is extremely good on the position that is about 2,000. So 3% in 2 weeks. Very good. The price move kind of offsets this, but they're still ahead. So yeah, both of them are still good. So one thing that I want to also show is that we can look at the portfolio P&L, all the trades into one view, and this put helps offset the downside risk. This is risk to the upside. So we're working on a new feature as well, and this is a preview, but there's risk analysis here. And again, in your case, Rosalie, it's fine to make money. It's fine to be right directionally. But yeah, how do you think you would need to manage risk, or do you know what to look for when you manage risk? Maybe.
No, I don't know really what to look for. I understand that in order to offset your risk, you tend to get less rewards, and so people prefer to get a lot of rewards, but don't really understand that gives them a lot of risk as well. But yeah, I would love to see.
Yeah. So this is also the title of this podcast, which is how to reduce risk, a controlled risk, to increase profit. So here, what we're trying to do, and again, very alpha, but you'd like to see if you're going to be liquidated. That's the main risk that you have to look forward. If you see the price move against you in a way that is extreme, you can get liquidated. This is kind of the leverage component of Panoptic. What we're showing here, and this one is a bit boring, but the red curve is your collateral requirement. So this collateral requirement changes with price. The green curve is your collateral balance. So in this specific case, I pulled up another account, but in this specific case, you would be liquidated when the two curves cross. And now you see it's in ticks, it's a weird way, but you see there's no crossing if the price moves by, again, plus 2x, minus 2x. Again, it's not going to be liquidating or a case for liquidation. So this risk management tool will be very useful for understanding the sliding scale risk. If the price moves 10%, 15%, 95% down, will you get liquidated and at which price? So Intern is extremely conservative in terms of their buying power. So even though they have about $400 worth of USDC, they won't get liquidated by a plus 3x or decrease in 3x. I had to look around for different accounts. And again, this is not to single out anybody, but another user has a little bit more margin utilization. They have a little bit more risk on their trade. This is a new trade one day, but that one account is one that I want to highlight what this means. But same tool, risk analysis, now shows a slightly different picture. And what you see here is that the red line, which is collateral, does cross with the green line, which is balance. The other is required. So in that specific case, this user knows, okay, I get liquidated at this price and also get liquidated at this price. This is a straddle, both sides exposed. So that's a very, very important information to have, to know, yes, I can make profits if it's in this range, but also if it goes way beyond it, I could get liquidated. And liquidated means you have someone else take control of your account. They close their positions for you. You get exposed to very, very bad losses potentially. So that's kind of one of the key metric we want to show. Where do you get liquidated? Where do you get all of your collateral seized? There's kind of different points. So this is kind of a starting point. So the getting a greater view of your whole portfolio is kind of what also helps with risk management.
Cool. Yeah, I like it. Very interesting.
And yeah, so we have similar things in most, not even trading firms. They don't show as granular as that, but in our case, we show exactly where you get liquidated. And yes, Intern is extremely safe, and they use only 20% of their margin. They are in a good spot, so they won't have risk of liquidation. So yeah, this is good. We can go to the other positions, but I'd say that all of them have been working. So again, we try to bank a large number of small wins, and these small wins will kind of pile up and generate positive returns. All of the positions have generated positive P&Ls from Bitcoin to Eigen to BTC. Let's go quickly to I look earlier, they all moved not much, so it's very not worth revisiting. One that is being a consistent winner over time is this ratio trade. And again, we can go further around, but yeah, what do you think we should do? It's with this trade, given that we started here, let's move there. What should we do?
Yeah, I guess I would keep it open for a couple more days, but definitely place another trade in this pool, something that could kind of maybe increase our profits a little bit, since it probably isn't going to realize its max gains from it being almost halfway through and barely having hit halfway. So yeah.
Yeah, I mean, it's. I'd say it's no one ever went broke making a profit. They're earning 10% on that position. I would say that yes, the management criteria might be 20, 30% profit, so even 50% if you want. So in that case, 10% in 2 weeks, pretty good. Part of it is directional, part of it is the fees. So yeah, I would say we can keep it on, but then we can maybe create a new position to magnify or create more profits, because we are still pretty high in terms of margin utilization. So 13% utilized. Actually, let's go here. Let's go through that trade. We haven't set one up in a long time. So yes, if we look at the ratio of ETH BTC, Rosalie, do you feel bullish, bearish, or neutral on that ratio?
Neutral to bearish.
Neutral to bearish. Okay, which is a lot of what we've seen. Do you feel like we should increase our capital efficiency a little bit, or you want to be just pure directional? And the reason why I ask is that you can have a very, very straightforward call option, which pays when the price goes down, but we can also have at the same time a straddle or something that is a bit offset, more capital efficient. But then if you're wrong, or if you're not as bearish, if you're more bearish than you think, you lose. So yes, maybe neutral to bearish might mean this, but yeah, are you confident getting exposure on the downside here, or you want to keep it a bit less open-ended and just have profits?
No, definitely more capital efficient. I think I don't think that anything really dramatic will happen. I do expect both of them to, go down and back up a little bit between kind of just a similar range. I think ETH might be going down faster, but nothing too crazy.
Okay, so that is, again, maybe that could be a good trade where it's bearish. You make money if the price goes down. If it goes down too much, you may lose, but that's kind of this neutral to bearish stance. You double your capital efficiency because you have two legs, one put in a call. We only kind of we enable this to be twice as capital efficient. So even though we have a position size which might be zero point 0.1, or maybe this one we'll say 0.5, we have effectively twice as much because we have a put and a call in play. So the fees are twice as large. The trade-off is that you get more fees, but you have more potential risks of losses. So, but yeah, I would say this might be a very good trade as well on terms of the neutral to bearish. Double down, have another trade on the BTC ratio that is kind of something that can be realized there. So yeah,
Cool.
very cool. So I'd say we'd keep it there for today. We have another section coming with Brendan, but yeah, overall, but yeah, I think Rosalie's, and again, Rosalie's trades and the interns portfolio um, experience is pretty good. So again, I'm very happy that we've been able to demonstrate sustainable profits and kind of, again, large number of small wins, which is I'd say that we probably had one or two trades that went against that, and maybe 10 or 12 now that have been profitable. So it's very, very good in terms of mental mental health. You get lots of wins, one big loss, but maybe you move on and then move to the next one. That's kind of what we want to see.
Definitely. Yeah, curious to see what else we can spin up next week. Yeah.
Yes. And since we're here with Brendan, this is again the second half, which is, there we go, the best or the worst trades. Luckily, intern did not make any of those worst trades. Not the best either, but it's fine. So we'll just kind of keep going. But yeah, thanks very much. Thanks very much, Rosalie. And yeah, we'll go with Brandon. What's up?
Amazing. Happy Friday, Guillaume.
Of course, happy Friday.
Yes, we are covering the coolest and, I guess the coolest trades that are happening from you guys. You Pan Optimist, we're covering some of the best trades, some of the worst trades. We're going to look at both Ethereum and Unichain, the two networks that Panoptic is currently deployed at. So one is the mainnet, and then the other is an L2. So slightly different trades, but we'll go over just the best and worst. This time we're just looking at trades that were opened in the last week. Last week-ish, or closed in the last week. So a little bit more recent. But I think your best score so far is around 40% or so. So let's see how you do. We'll have 4 trades to cover and see if you can beat your score. So do you want to start with the best trades or the worst trades?
Yeah, the market has not moved much. It jumped up earlier this week. Now it's going back down. And I would not say that the best trades are directional, or maybe the good timing of that may be helpful. Actually, yes. A lot of folks are buying calls. I know the protocol. So I'd say the best trade is likely a call option buyer that timed it right. They purchased a call, went up 10%. They could get a lot of profits. Let's start with that.
Okay, so we'll start with the best trades. You're guessing a call option. Now we're going to cover one on Ethereum and one on Unichain. So you got call option for one. What's your other guess? Is it also call option?
Maybe yes. Two call options.
All right, double
The
down.
fees don't necessarily make it worthwhile. And again, I don't think a lot of folks had straddles or kind of even selling puts that were kind of, you have to time it right. But yeah, two call options purchased, let's say.
Okay, sweet. And yes, sorry, I lied slightly. Some of these are maybe opened a little bit before a week ago. So hopefully that doesn't change your prediction here. So we're going to start with the best trade on Ethereum mainnet. Let me jump to that one. Let's see here. I think it's this one. So this is a ETH option, and it is actually a short call here. 12 days ago, the ETH price was at 2,000, and today it's just under 2,000. So I know we dipped down to 1,800, but back up, and so now we're at 1952. And so this is actually the reverse.
Yeah, well, it's kind of wrong directionally too. So it's not even buying a call, but rather selling a call. And again, the 12 days ago, it was really 2,100, and today is 1950. I guess if you look at the trends, definitely down. But yeah, got it wrong for sure.
Yes, I may have confused you with the time scale here, but no, we got just your normal regular 1 month call option. They sold at the 2, 3, 4, 5 strike. That's a fun one. But since then, the price and it was more on the out of the money side when they started, and then it went almost completely out of the money now. So it looks like their lower boundary here is 1845 when the delta flatlines, and they probably were there almost at some point over the last 12 days. But they're still in a good range right now, mostly out of the money and collecting some decent accruals of premia over time. As you know, in Panoptic, the premia is not collected up front. It's zero there, and then it goes up and up and up, kind of like a funding fee. But this interval is every block. This chart shows you every hour for convenience sake, but every block it's kind of ticking upwards. So we're currently at over $200 in premia, over $350 in gains.
This is pretty cool. This one has a 1.49, so 1.5x multiplier. This is actually very juicy. Typically, when you see these trades, they kind of run their course almost by the time they leave the range. So the trader was right directionally. They got about 1.4% in capital appreciation. But yes, the fees are now what makes the bulk of their returns. And I would almost be tempted to say that if I were holding this position, I would not even close it, because that 1.4x fees is gravy on top. I would almost treat that one position as a delta neutral one now, because the delta is 0.13. So even if it goes up or down by $50, $100, it's not going to impact the P&L too much, but you can get a lot of fees on that 1.4x. So you increase profits by keeping this. If the trader is still bearish, they may be even selling a new call or offset straddle or a call spread. And that would be maybe how I would handle this. Keep this on, milk the 1.5x returns, and maybe redeploy a new leg or new option if you're still bearish.
Sweet. Yeah, great advice there, and very exciting with that spread. It looks like somebody has bought up maybe some of this contract. Actually, a lot. It's a very popular, this number, 2, 3, 4, 5, very popular.
Yeah. I mean, people are bullish. They think the price is going to go back up. So I'm sure that they are buying those calls for sure. All right. Brendan may be out of commission. Let's see how this goes. Maybe I can try to find that account. But yeah, this is a very cool one. What up, Brendan?
Hey there. Sorry, switching over.
All right, you're clear. You're back.
For the feedback audience, really apologize for that ASMR. Yes. All right. Well, let's bad internet, but hopefully it stays for the rest. So let's move on to the next trade, unless you wanted to talk about anything else on this.
No, that's good. Yeah. Keep buying those calls, and those sellers will be making more money. But yeah, it's a win-win. If your call goes in the money, this position again is gravy. Yeah. Anyways, I'll let's go to the next one. But yeah, call option selling. This is very, very cool.
All right, we'll let you change your answer though for the next one. Do you think the best trade on Unichain is still a long call option?
No, I would say it's also. I don't see a lot of put buying. So let's put buying. So let's still say it's a short call. Now I'm being influenced. And I'm sure you regret it. But yes.
All right, we'll give you a freebie change. Hopefully you don't regret it. Let's go to the best trade on Unichain. And it is a
yes.
So
but this is they open and close it. So this one, yeah, they were masterful in their management, and yes, this is very good. But yeah, let's go over it.
Yeah, so it was opened just under a week ago. It was closed about 2 days ago, as you said. So when it was opened, the price of ETH was 1942, and then the price went up a bit to 2,038. So nearly $100 increase, about 5% increase. And then they closed it before the price went back in a different direction. So this is almost nearly a 2 ETH contract, short put, and locking in some gains of around 5% in profit. With leverage, this position was basically 20% gains profits. So yeah, any thoughts on why this position did so well and what we can learn from the short put?
Yeah, so this one is directional, and then even we are debating even internally now, like how do we show these percent increase? They made $190 for sure. That's kind of their P&L, and that's very good for a trade that lasted again 5 days and a half or 5 days. But yeah, so the profit is maybe where you want it to be. They timed it right because price went back down. They were probably taking notice of the market, harvesting those gains. So again, put selling is a positive delta strategy. They sold it at a price and closed it at a higher price, so they're making money. And yeah, this is also another very good trade. In that specific case, yeah, as I said, masterfully managed because they probably sold near the top. And then now the price went back down, so they would have lost otherwise. But yeah, actually, let's see. The Pico top was definitely what's the price at close? Yeah, that's right, 238. 2050 is actually the top, interestingly. So they actually made a very, very good trade there for sure.
Looks like they're actively managing this position then.
And this is on Unichain, right?
Yes.
So this allows, Unichain, faster trades, lower gas. You can be a day trader almost. And this was a monthly or weekly option as well. So this one earns a lot more fees. They held it for 5 days. It's a weekly option. It worked perfectly. If it were a monthly, they would have maybe earned less in terms of appreciation because it's a wider position. But yeah, this is actually the way that these puts should be traded. Both part of it directional, but also part of it earning fees to offset potential losses.
Yeah, this was a very smart trade. They were right in every aspect and very reactive. So let us go then to the worst trade of this week or the last 2 weeks. So what are your predictions on the worst trade of Ethereum and the worst trade on Unichain?
Yeah, I think I doubt someone overreacted and closed their short calls. I'll be on the short side. I don't think the put. Maybe don't actually. Let me rephrase this. What we've seen consistently is that a lot of the wins and the best trades are selling options, where you sell a put, sell a call, be directional. Part of it is kind of what makes it so that it's right directional, but also fees on top. And my thesis as well, and then a lot of what we see is that options buyers are, it's a bit more difficult to make money. And I may venture and say that the biggest loser was a maybe a since the biggest gain was negative price action over the past 2 weeks. They made money. Now negative price action over the past 2 weeks is where maybe someone buys a call option and they lose money. So biggest loser, maybe someone indeed purchasing a call option, and another one might be a put seller also selling a put option and getting wrapped in the price move that's down.
Okay, so we'll go selling a put for mainnet and buying a call for Unichain.
Yes, yeah, maybe so. Let's do it.
All right, let's check on Ethereum mainnet what the worst position was over the last half month. So I think let me switch over this screen here.
Oh, this one, right? Okay.
Yes. All right.
Is this mainnet?
Ding, ding, ding. Right.
Yes.
This is
Okay.
mainnet. I believe.
Oh, poor guy.
Yes.
Yeah.
Very poor guy. This is a short put. 10% in losses, and on leverage, this is slightly more than 10% losses. Just over $700 in losses. No premia.
No, that's right. They set up. This is a pure directional play. There's no premium, so it might be better than buying options. But yeah, this is in the money. This is they earn no fees, 0% in premia, and pure pain. Price went down.
Yeah.
They had
started in the money too.
Yeah, exactly. Interesting, and in 4 days too. So it might have been fine had they held up, and then even now it would have been not as bad. But yeah, no, this is unfortunate. Try to be in the money when you try to be in range when you sell an option. Try to have at least some fees collecting.
Yeah, so this range factor here, if you click the leg on the UI, you'll see like two numbers pop up. It's the same two numbers here as this range. And one thing you can do is always hover over things that you're not sure about. But basically, as we mentioned, that Panoptic's a bit different. It's perpetual options. You're not earning a premium up front. And so your premium is accrued over time as the price stays in between this range. And so the price started outside of that range, right, at 21.92. That's outside of this 2,500, 41.70 range. That means it's not going to accrue premium unless the price even goes up. Like, what is that? Like 10% or so, or 20%. So they're expecting a large increase before the premium even starts accumulating. And unfortunately for them, the price actually went down rather than up, which means they lost and didn't earn any premium as reflected here. So locking in a big loss, but at least they cut their losses short.
No, but they sold the bottom. And also, I mean, this is a valid if you can do it on leverage. So here they are controlling 2 ETH worth of capital. The collateral requirement, because it was in the money, is still quite high. So again, 5,000. So in that case, might have been the best trade from an even capital efficiency perspective. But you can imagine you have like maybe in the money put options allow you to be a bit more capital efficient. If it's not as far and it's maybe barely out of the money, you have maybe a 1x, 1.5, maybe 2x even leverage that you can do. But yeah, I think be careful, kids. Selling those in the money put options for sure.
Yeah, I mean, I don't see any reason to sell a deep in the money out of range option on Panoptic. Is there any reason why you should be this far?
Yeah, maybe so. Again, if you have more than one position open, you have a whole portfolio, you want to get some deltas to offset your portfolio P&L. You can do this with futures. You can do this with other options. In that specific case, maybe they were so off that they said, my deltas are so negative that I want to get some positive deltas to it. And if we look at the portfolio, we see the whole curve. They want to be flat maybe. So that's one example. You can short or go long on a perp exchange. You can do this as well inside the protocol. you pay fees to swap. You have kind of maybe not the best way, but that could also be another way. They got long because the deltas were too negative, but that meant they may be losing 700 on one leg, but the rest of the portfolio may be up 700, and it's still even. So even though we look at one trade in isolation, something that is part of a whole portfolio may paint a more complete picture.
Okay, so with the portfolio, this trade might make sense, but
Hopefully,
if you're just making this trade, it doesn't make sense to be this far out of range. So bring
Yeah.
your range closer to the current price.
yeah. for
Okay,
sure.
and as usual, not financial advice. Nothing we say here is financial advice. It's for educational and entertainment purposes. So do your own research. But let us go to the last and final trade. Right now, you're 1 for 3. Let's see how you do on the best trade on
The worst trade, yes.
on Unichain. And I think you said it was a long call. So we'll switch over.
Yeah, I think I'm gonna be wrong.
Well, you got one leg right.
Exactly.
So half a point. Long call is one leg, short put as another leg. This was about half an ETH of contracts. But this is something different here. We've got a 1 month short put and a 1 week long call. Is there a name for this strategy that is familiar to you?
Yeah, so it could be called risk reversal when the two legs are far apart, and it's a known strategy, I guess, to some extent. In TradFi, risk reversal, or in that case, maybe a synthetic long or long perp. You're kind of in the money call, in the money put. It seems weird a little bit, but you have kind of a directional play here. They are, I don't know if you click on the put, what was the range? So they were probably, click on the label for the put on the right. Yeah. They were probably in range when they started. So they were hoping to make some money on the way up. And then at the same time, they did not want to have as much risk on the downside. So bought a call. I don't know. It's a weird trade. It unfortunately did not work for them. But yeah, they got hit by both the premium to pay on the way down, but also the capital exposure. So I can imagine this is bad. Yeah, it's buying a put call, but at the same time selling a put. And the losses pretty much came from the put option that was sold.
Interesting. So only a small portion then. That $14 in premia, that was paid from the call leg because the price went down. But then the put leg that they're selling the put, which is a slightly bullish position, so the price going down puts it more in the money, and that's where they got maybe 90% of their losses then.
Yeah, something like that.
Okay, so and why? I guess why the difference in time scales? I mean, the call leg is a week.
Oh, yeah.
And the put leg is a month.
I think we default to weekly options on Unichain just to make it a bit more dynamic. So maybe they just were buying the call here. If you zoom back up all the way, there is kind of a cool, like, the shape here. You're kind of leveraging, tapping into maybe more capital efficiency in the range of the both, and then you kind of write it off as it goes above. So it's maybe this was definitely a bullish trade on by the shape. The fact that they bought an option is that they were clearly directional. They were okay with paying the fees, but then hoping for it to explode back to 3K, which is the upper side of their put option. So yeah, I would say that the width makes it so that they earn fees for a longer time if it goes up. They could ride it all the way up to 3,000. So they held it for 1 day too. So maybe a bit of panic here, because I'm sure that had they held it for a few more extra days, it could have been 2050 like the other one and be a profit. So again, if you trade weekly options or even monthly options, try not to adjust it after a day or day to day. Just be a bit more conservative with your assumptions. But then if you think it's going to go up, you should ride it all the way up after at least 5-6 days if it's a weekly, or at least 2-3 weeks if it's a monthly. Because that overreaction meant that they secured a loss, as opposed to maybe now it's back above 2K, or at least at this point. So they may have been like in the profit.
Yeah, I for me that's a hard decision, because the markets were all down. Maybe this person's trading often, closing this position, opening a new one.
But it's still pretty capital efficient. So again, 50.57 worth of notional being like $1,000 worth of notional being controlled. The capital efficiency is requirement is only 700, so they still have like a 1.4 1.5x leverage, so it might also be a directional play. But yeah, I would say that these plays I can imagine if you're very bullish, and this is kind of super bullish almost because you have twice the exposure, twice the deltas in the middle than on both sides, so that might be where you lose twice as much.
Oh, so it's more steep in the middle because
Yeah, exactly.
Okay, so out here on the tells, it's only a 1 delta, but in the middle here, it's like a 2. You're saying?
Yeah.
Oh, interesting. So
there's a different way. This is also a different way to do risk reversal, and maybe let's try go in the trade, and we'll try to create one other tamer risk reversal trade, which is now capitalizing on not as much, but yeah, in the strategy, it's going to be a long perp, but you put the put on the left, yes, and the call on the right, all the way up, like keep going on the right, and then keep going on the left for the other one. So this might be a different type of risk reversal where you are still exposed to these violent moves, but if you're partly wrong, you don't have as much deltas in the middle. And that is maybe a way to offset the risks. Maybe you have upside risk that you want to offset without paying too much. So these risk reversal have kind of a role to play when they're not inverted, which is a bit more the risk management side. But yeah, that might be maybe bring the call a little bit back so it's a smoother payoff. But yeah, that thing is lower deltas in the middle, whereas it's higher deltas. So it's not committed to being bullish, but still a little bit. And that kind of makes it so that you have some risk management on the middle. You still covered in case there's explosion on the upside in terms of price action. So
very interesting. Well, thank you for sharing those tips and educational advice for us. We'll end the score, I believe, is 1.5 out of 4 today.
yes.
So better luck next week when we cover the best and worst trades every Friday here. But we'll also see you on Monday for another segment of Stop Losing and Start Trading.
Yes.
Any other market news or updates you have for PanOptimist today before we end this segment?
No, I think that's it. So we're keeping the PIPS program on. It's 11. Well, a lot of folks are earning a lot of points. This is what we want to see. We expect to have maybe a large player entering to the space. So we'll release more information, but the growth we've seen was mostly organic, and this is great. We want to see a lot more trading activity, and that means we have to have a lot of more sophisticated players. So this is something we have been cooking up for the past few weeks. So this is great. But yeah, again, keep trading, stop losing, start trading, but then do it responsibly. Learn with us. Again, not financial advice, but there's a method to this. It's not always very, very casino-like and very, very. It's hard to be consistent when you bet and make money consistently. It's much easier to be on the risk, like the sell side, or at least have a more tame risk profile, which is that risk reversal is one example, but also selling options closer to the money is the other one. So yeah, overall, lots of good advice there. But yeah, again, people learn, and hopefully these trades that were the biggest losers did not cause too much hurt, and then it's teaching moment for those traders, hopefully.
Yeah, let us know if this is helpful. Join our Discord. It's in our link tree on Twitter here and also YouTube. And you can ask questions for Guillaume, the professor himself, and see how if he can analyze your trades outside the show as well. So please, follow us on Twitter if you haven't, at panoptic_XYZ, and stay tuned for more live streams like this.
Perfect. All right. Thanks, Brennan. Thanks, Rosalie.